Hello everyone, friends. Here's another market review. Today we'll talk about where we expect the price to move next. Spoiler, I'll give the arguments for why I expected that prices would start to decline from the current levels. We should expect a correction, possibly even down to the lower boundary. We'll go over all of this in today's review. And before we begin, let me remind you that we are using the trading platform Pro Service. This is a service we developed for analyzing limit orders as well as margin orders. It is these that show us the future of the market, in other words, its intentions. The first thing we'll start with is the standard combination of metrics, which shows us entry points for both long and short positions and displays them on the hourly time frame. We mainly monitor spot metrics, although it is also possible to view futures metrics. But still, spot represents real money, which shows us the entry points, the exact places to enter the market. And when we said that it makes sense to consider longs, it was when the difference between limit buy and sell orders became greater than 3% on the ask side. By the way, I recorded a detailed video about bid-ask for the Academy. You can watch it in the previous video. There should be a hint appearing at the top here. And be sure to study what it is so you have a clear understanding. When such an anomaly occurs, these are the points for entering a long position. Especially when this happens with Bitcoin, it's an excellent opportunity to make the right long trades at specific points. And at the moment, as we can see, the difference is already minus 67 million, and we are far from a crossover. But if we look at the short preset, we'll see that on the 1 hour time frame, we are already close to the actual crossover points. Since on the 1 hour time frame, there still isn't an actual ASC crossover of 1.5 and no diffs, this tells us that for now, the entry point is only nearby. Well, for example, when we had actual crossovers, it was at this point. Later, it was in this range, after which we saw a significant correction of more than 10% in Bitcoin. Now, once again, we are near the crossover points, and this is happening at lower prices. That is, the limit seller is shifting their limit orders across all Binance spot pairs. Pay attention to the total. My indicator is getting lower and lower. Shorting is a synchronized story, meaning market makers and algorithms are distributing all altcoins at the same time. And the proof of this is that the market is falling in sync. If Bitcoin falls, all altcoins fall at the same time. In other words, these are not manual sales. This is the work of algorithmic bots. And right now we see that preparations are underway to start another wave of decline. I have chosen the following approach for myself. I will wait for the actual crossing of bids and asks. And only after that will I open my short position. But as we can already conclude, it is definitely not 100% the time to look for longs right now. That would not be the best decision because we have already reached zones where, let's say, local market distribution is happening or starting. Yes, we are all talking about local movements here, not about some potential major moves in the future. We are talking within the framework of intraday trading. So to emphasize the conclusion, we are expecting prices to go lower than the current ones because prices are already starting to approach distribution zones. That's the first point. Yes, let me guess. You're a trader and you can't consistently make money in crypto. You've taken tons of courses, but you're still in the red. Advice from so-called gurus on the internet doesn't help. If that's the case, you're just like 95% of traders. But the problem isn't you. It's about what arguments you pay attention to when opening trades. I've prepared a video where I show you how to stop guessing where the market will go in just 30 days, stop losing money, and start taking profits from the market instead. You'll see how to work together with the market maker by using limit order data that no one else talks about. The review is free. There's a Telegram bot at the link in the description below this video and a QR code on the screen. The second thing I'd like to draw your attention to, of course, is margin loans. This is when margin traders borrow USDT from the exchange in order to buy coins with it. When the total margin exceeds $250 million, that's when we start to see corrections. For example, this happened in this range and it also happened before the dump in June. So this is quite a high quality metric, which in fact isn't displayed anywhere else, this metric, on any other platform, on other services, and we can anticipate in advance when the market has reached those points where it will be ready to move against margin traders. In one day, $80 million was accumulated. It's not $250 million yet, but nevertheless, it tells us that during the current rally, margin traders are still taking out loans from the exchange. And when the next wave of growth comes, most likely in the form of a squeeze, that's when the total amount of loans will reach $250 million, and that will be the point to enter a short position. This is the second argument that suggests to us that when loans are growing, we do not open longs here. Under no circumstances do we consider longs when the total amount of loans exceeds $250 million in a day. But for now, we're close, so there is still a little room to move, a local one. The third argument we'll look at today is funding. As for funding, right now it's such that there's no point in even talking about longs from the current levels. Why? Because our group's funding is higher. Sometimes it even becomes higher than the group's negative funding. On our service, we sort all Binance futures pairs into 4 groups. I've displayed 2 of them on the screen right now, negative and above. So the negative ones show us that at the current hour, 8% of all Binance futures pairs are being shorted with such a volume of funds that the futures price becomes cheaper than the spot price. And above, on the contrary, means that the price of the futures pairs being longed is 5% more expensive than the spot. And precisely when there are more longs than shorts, that's the point where the market is getting ready to start hunting the shorters. Well, for example, let me open the 4-hour time frame so we can see a longer period of history. We can look at the history starting from 2019, but it's probably not worth going that far back for an intraday review. But let's pay attention anyway. Here we go. On the screen, you can see as much history as fits. Oh, that's quite a long period, right? But look, for example, in August, there were more longs than shorts. And afterwards, well, locally we saw, of course, a correction. Bitcoin dropped by 8%. Well, you can see for yourself what happened next. Moving on. That was on September 15th. And also, as soon as there were more longs than shorts, they were liquidated by 8% in the short term. There were more such instances. This was right before the dump from October 10th to 11th. And here we entered the market phase where traders are not afraid to go long, but no one wants to short the lows, because usually, as at least the funding shows, significant traders tend to short the lows and go long at the highs. And here as well, there was a crossover after which we saw a significant decline. There was also a crossover at the local highs here. Then this happened again in May, right before the dump. It also happened on June 11th, after which we again saw the price move down to a lower tier. And now, once again, we have a similar crossover forming, which suggests that the price will be pushed lower. And all these arguments that I'm listing now suggest that looking for long entry points from the current levels, even for trades lasting 3 days, wouldn't be quite right. That's why I've decided for myself that I will be waiting for the limit metrics I mentioned at the beginning of this review. If you've forgotten, you can rewatch it. They will reach their values when it will be possible to open a short position, that is when we have a crossover. On the 15-minute time frame, we've already seen a crossover and a price halt. But on the hourly time frame, we're close, but there hasn't been a crossover yet. It only makes sense to talk about longs again when we have another crossover, a divergence. It's always scary to open longs at this moment because it seems like prices will go lower, much lower than 50,000, maybe down to 52 or even 48. But that's all just speculation. We're still talking about concrete things here. And the entry points for longs are the places where crossovers occur, DIFF and ask. For shorts, it's the opposite combination. And at this moment, it seems like prices could go even lower. But by the way, right now it doesn't seem that way. REMIC really does look weak even on the chart. Here, look at the chart. We understand that the chart shows us the past. Why? Because it's already the history of completed trades. But the limit metrics that we're looking at, they show us the future, where exactly the market will be heading in the near future. What else can we pay attention to? Well, of course, it's the DIFF 15 metric, which shows us the difference between limit orders across all spot pairs. On Binance at a depth of 15%, then here the metric looks as follows. The metric values are already approaching those levels, though to be fair, they haven't quite reached them yet, but nevertheless, they're getting close to the values from which we saw a correction last time, on June 16th. There's still a little room left to go higher. Most of the move has already happened, most of it is behind us, and there's just a little bit left, about 1.4 to 1.5 of the entire movement that has taken place. And again, we see that the prices are lower. Yes, the minimum potential move is up to the balance, but if we consider the absolute minimum, then at the very least we're looking at the levels from which the correction started last time. And we're already approaching those levels. That's also a negative sign. And it's even a negative that now, if you look, the DIFF metrics have overheated more than the price of Bitcoin was last time. June 22nd, that is, on June 22nd, the price was higher than it is now. but at the same time, the DIFF metrics were less overheated than they are now. In other words, there are more limit sell orders, but at lower prices. Unfortunately, that's how it is for now. Locally, the market looks weak. So let's say, without harboring any illusions, we understand that it makes sense to consider, if you have open longs, to look at a hedge short, or if you don't have open longs, it would be appropriate to start thinking about building a position. A short position, at least in steps, yes. What conclusion can we draw? Locally, I still think we'll be treading water in the same place. Probably the price will be pushed a bit higher, just a little, up to 64, I think not more than that. And after that, the limit metrics will heat up to short levels, as will the margin metrics. They will also indicate to us that it is necessary to open a short. Those are my thoughts. If you're interested in what I'm talking about, check out my Telegram channel where you can get to know the Trading Platform Pro service in more detail. There are a number of materials there that are educational and explain the logic behind how these metrics work. Leave your comments, I'll respond to the most interesting ones in the next review. Also, subscribe to the Telegram channel to connect to the Trading Platform Pro service. This YouTube channel will help you earn money, so you can subscribe here as well. That's all from me. Thank you all. Goodbye, everyone.